back, all you capitalist pigs. My name's Jason Stapleton, and this is the Forex Market Preview. Thank you so much for showing up. Let me turn down my TV here. We've been to Greece. Everything is Greece and Spain and the nastiness that's going on over there, and bonds are right back up, and there's this, we are no longer dealing with fundamentals. Just flat out. You need to understand that for those of you who think that fundamentals need to play a part in what you're doing and your trading, I want you to understand something. We are no longer dealing with fundamentals anywhere in the world. We are really dealing with government intervention. And that is the play. That's what everybody is banking on. They're not looking at what the fundamental conditions are in Europe, in Spain, in Greece, and in all of these places. Because if they were looking at that, we would have seen a run on all of those major banks already. Nobody's looking at that. What they're looking at is, what is the ECB going to do? What is the Federal Reserve going to do? What is Germany going to do? What are the governments going to do to delay, and what everybody hopes is offset, this problem? The problem with that method is, number one, is that there's no way to anticipate what government action is going to be. That's first and foremost. Because it's not based on any rational, sound decision making. What it's really based on typically is, what do the people want? Which, while that works fine for governments, it certainly is not a great idea for the actual country in which the decisions are being made like that. And then secondly, the second biggest thing that becomes a problem is that there's no way to take a look at market conditions and make an estimation on where it's going to go and when, because all the markets are playing not off those fundamentals but off of the government. That's why you see these wild gaps today, followed by gap fills. And as you can see, I've got a couple of positions on right now, and they're really just test positions. I want to see one of two things can happen. And let me just go ahead and pull up the pound yen, and I'll show you this. The pound yen had a gap up, and let me shut off this so we can see it. We gapped up. Okay, and then we closed above this resistance shelf that we'd been sitting on. See how we had, test, and then boom, market closes above that. Now, I thought about putting out the Forex Market Preview last night, and you could trade the gap fill on this, and I thought, normally you would trade a gap fill and look for the market to fill up, and then you'd be looking for, a continuation or a long position here. I decided to wait just to see if the gap fill would happen, because I wasn't, already you were seeing a lot of the sovereign issues still in the forefront of everybody's minds. So you had this nice little gap up, and then I thought what happened is we'd see a fade, and that's exactly what happened, is people faded that, and now we're back down filling the gap. So I have a test position on here that basically says, I want to see what's going to happen. Is the market going to rally here and come up into these other resistance levels, or are we going to fall off? And are we going to come and be stopped out? Now, in order to test that position, I've got to have my support levels in. I've got to have my stops below the support level. And what I'm basically looking for is about a 1-to-1 risk profile to target 1. It's pretty simple. This is a structure play that looks something like this. And this is something that all of you can do. Anybody watching this video can do. It basically says market has come up, has made a resistance level, and then has punched through that resistance level. Now, this resistance should become support. And if it does become support, then you have to look at, where do stops go? Well, they have to go to bare minimum right there, but more than likely down here. So that this market has a chance to come all the way back in here, come back into the zone, find some resistance, and then rally on out of there. But certainly across the board, we are seeing this same setup. Everything's looking about the same. And if I go ahead and we take a look here at Euro USD on a 4-hour, same situation occurs. We see the gap up above the resistance level. Markets come back down in to retest that support level. The support and resistance of the market is telling us, the structure is telling us that the market is going to rally. Now, will we see it or not? I don't know. That's why I say you got to test position out. You're saying, all right, if this trade works, it's going to signal a strong shift in the direction of the euro dollar. Now, my gut tells me that the euro's going lower, that the things in Europe are not getting better, that we are going to see continued weakness in the euro and continued strength in the dollar. However, I don't get to make my trading decisions off of my gut. I read a very interesting book recently called The Power of Habit, and it's really keying me into not only foundationally what we teach here, which is in terms of having a trading plan, writing out the trading plan, testing the plan, trading the plan consistently. And we view it from a standpoint of neuro-linguistic programming and neural-associative conditioning. I hadn't considered what we're also doing is helping people build habits that allow them to come in and perform a repeated action day in and day out without thinking about it, to, in a sense, remove the emotion through repetition. And I'm actually thinking about modifying some of the concepts and the way we teach things to incorporate more of this habit building, because we know that emotions are what get in the way. And anytime we start trading on our gut or on our hunch or on what we feel or on, we have all kinds of problems that exist or that come out of that, because we're operating not from a standpoint of logic of what we see and what we know to be true based on the charts, but we're trading from a standpoint of emotion. It's how do I feel today? Did the last 3 long positions I take on the euro, were they winners or losers? Or was it mixed? If I just came off of 3 winning trades to the long side on the euro, I have an emotional attachment to that long position because those are paying. If the last 3 long positions were losers in the euro, then every time I look at a potential long trade, the pain comes back. And when we take a look at that, when we view the market that way, it costs us money. There's no other way to sugarcoat that than to say, if that is how you're doing your trade, if that's how you're trading based on how I feel, what I think is going to happen, you're trading at a severe disadvantage. Once you put yourself in a position to trade based off of technicals, based off of what the chart is telling you, well, now you're not always going to be right. That's for sure. But you are going to be making strategic decisions based on facts and based on what you know, not what you think. So, anyway, pound dollar, euro dollar, there's not a lot else out there that, I'm really interested in. I'm looking around the market here. Let me just see. Let me pull over. Hang on one second. Let's just take one more look. Let's take a look at one more thing. I'm gonna pull over the pound dollar here. Pound dollar on the 4-hour. We're looking at a potential. Well, hang on just a second. Yeah, we're looking at a potential cipher pattern here. Let me see here. The cipher pattern is going to come in looking like this. Oh, hang on, come here, man. Well, Fibonacci retracement. Swing high to swing low. Right in there. I go and bring my deal in here. This is the cipher pattern. Without going into detail on all of the rules here, what we're basically looking at would be a press back down into 153.70s for potential long opportunity. Those of you who are Pro Trader clients or have been through the Ratio Master Series are going to notice something else here, and that's the shelf coming in right here. And when we've got that shelf in there, certainly that's going to be, if I bring in my Fibonacci retracement, that's also going to be right along the 382. 382, of course, signaling Fibonacci failure trade, right along that major shelf of resistance. So there are a couple of different trades that you've got potentially setting up here, both of them long position trades. The market may absolutely throw us a big curveball here and spank us for trying to get into this market. We had a gap up last week. Gap was filled, and then we traded sideways all week. So the market may punish us for getting into this trade. But if the opportunity presents itself, like I said, you can't trade off of what you feel. You can't say I feel like the market's going up, and therefore I'm going to trade to the long side. It doesn't work that way. We trade what we know. We trade what we see on the chart. We trade the evidence in front of us. And the evidence right now, with the gaps and the gaps coming above the resistance shelves that we've been seeing across the board, signals continuation to the upside. And so I'm going to be playing that this week, barring some catastrophic downward movement that stops me out on my positions. But anyway, been running along. We're about 10 minutes in or so here, and so or I guess I'm not running long, but I wanted to talk to you about a couple of other things. Number one, meet me in Kansas City. If you guys have not signed up, if you don't know about it, there are very few seats left. We are keeping this event small, and because it is basically a week of live trading, side by side with Todd and myself and the rest of the team here. Akil will be in town. And Darren will be at the event for you Cipher Pattern gurus, and basically what we're going to be doing is just spending a lot of time working on your daily routines, your habits, and working with you to improve your trading in a live one-on-one environment. And to do that, we've got to keep our numbers small. The mastermind group will also be in town. So you're going to have access not only to us, but also another group of professional traders, professional and semi-professional traders who have made the transition that you're looking to make, who have done what it is that you want to do, and who are now coming into town for a closed-door session that we will hold right before the Meet Me in Kansas City event. So if you have not had a chance to sign up, I would highly suggest you do that now. And not wait, because we are going to close that down as soon as all the spots are filled. The other thing I'm doing is a one-day session coming up in July, and that is on. It's probably going to be. I could probably do it in 2 or 3 hours on money management. And we have a spreadsheet that we've worked out, a data sheet essentially, that takes all of your data that you have and almost a. It's a mixture between a record-keeping document and something that's got all of the formulas and complex mathematical algorithm stuff that we have for our money management models, and it's put into there. Now, this is the same money management model that we use in our fund, and so it's a very, very good one. I've never done a training just on money management, but it is by far the most requested training that I receive. Everybody asks about money management, and we have enough people now in our group who have been through some advanced training and who've been with me long enough to understand what it is that I do and how we operate here, that I think I can teach this and have everybody get it. So that will be coming in July. Be on the lookout for that. Now those events, those live trainings that we do, we call them breakout sessions. But those sessions that we do always sell out, and we keep those small as well, so that I can make sure I get all the questions answered and make sure people leave with a clear understanding. So there won't be 1,500 people in there, and your question will get answered if you ask it inside of one of those events. So be on the lookout for that. There'll be registration for that, and of course, like I said, that does fill up really, really fast. But that's going to do it. I'll talk to you guys next week. There's a few things for you to look at, some some understandings of the gaps and the fills and how all that works. And I'll talk to you soon. Until next time, good luck and good trading. Talk to you soon.